The billionaires are currently at war. They're shooting economic weapons at the hordes. Headline reads, IMF backing gold market. So the International Monetary Fund plans to sell 191.3 tons of gold on the open market, they announced, after markets closed in New York. And the headline then shortly followed after, gold futures drop sharply on IMF sales. So remember, in the aftermarket, the only people who populate that are insiders, governments, and, you know, the big guys. And the markets dropped, the gold price dropped by 1.6%. As soon as real markets opened again, the price skyrocketed.
I smell a rat. Well, remember Gordon Brown sold half of Britain's gold at $250 an ounce, a multi-decade low. So these people who supposedly know something usually know nothing. The IMF, of course, is making a big boo-boo if they hope to collateralize any kind of special drawing rights or do anything productive going forward if they're going to get rid of all their gold. Meanwhile, India, they just bought 100...
Well, they bought the last 200 tons on an off-market sale. So the IMF is now saying they're going to do this on-market. And why would they want to why would they want to scare people out of the market? And that's what many people argue, that gold is the only honest money in the world. In a world now just filled with fraud. Fraudulent derivatives, fraudulent fiat currencies, fraudulent governments, fraud everywhere. So I want to take you back to the end of last month at Davos.
Take us back to the end of last month.
To show you what the IMF may be doing. They may have taken a page out of George Soros' book. Davos 2010. George Soros warns gold is now the ultimate bubble. And this is a headline from The Telegraph at the time, the end of January 2010. Gold is now the ultimate bubble, billionaire investor George Soros has declared, sparking fears that prices for precious metal may soon suffer a tumble.
Yeah.
Cut to now, George Soros buys gold despite dubbing it the ultimate bubble. So in fact, while he was saying that, he actually doubled his gold holdings and bought 11,000 options, call options.
That's a lot. Yeah, I challenged George Soros to come on this show and debate me. I know he won't because he's an intellectual lightweight compared to my understanding of how these markets work, because we actually show how the market frauds are committed. He's just playing the media game by going to Davos and using it as a bully pulpit to talk up his position. He's using it to manipulate his own profits.
Well, but also the headline when George Soros, the most famous hedge fund manager in the world and history, is saying gold is in a bubble and you should get out, it's a disaster, that got big headlines through all the media. The fact that he actually doubled his gold holdings is just being reported in the financial media. It's not, the same people who sold out won't be necessarily seeing this headline.
The problem with Soros is that he has Jim Rogers envy. Because I think Jim Rogers is kicking Soros's butt in the investment arena in the last 10 years, and Soros is out there trying to get a date with Sharon Stone. He should be managing his money.
Well, and so what do the rich possibly know? Why are they buying all this gold? Why are they trying to shake people out of their gold positions at this point? Headline reads, U.S. bank lending falls at fastest rate in history. This is bank lending in the U.S. has contracted so far this year, 2010, at the fastest rate in recorded history.
That's right.
Lending has fallen by over $100 billion since January, plummeting at an annual rate of 16%. Prior to this, it was down at 10%.
Well, this is credit contraction or deflation, which actually creates a situation of negative real interest rates. And this is what's driving the price of gold, actually, because if you take the CPI and you subtract it from the rate that the Federal Reserve is offering, you end up with a negative real interest rate. It's like buying a CD at a bank and locking in a loss by the end of the year. You're locking in loss of purchasing power. And whenever these currencies go through a period of loss of purchasing power, of course, people go into gold as a way to safeguard their purchasing power. And obviously, guys like Soros and also Paulson, John Paulson, who runs a huge hedge fund manager, and Paul Tudor Jones, they're also buying gold hand over fist because they realize that after the deflationary collapse comes the hyperinflationary tsunami.
But what I'm also saying is that the economic apocalypse is upon us because these numbers, the U.S. lending numbers and the M3 numbers, the M3 broad money supply numbers, has contracted at a rate of 5.6% in the last 3 months. And this signals future deflation. So if you think it's already bad now, today, it's going to get worse. And this is what the insiders, the happy conspiracy insiders, the very wealthy, know about. And that causes chaos. Next headline, credit markets flash, hottest warning signal since crisis. So European credit markets are flashing the most serious warnings as the cost of borrowing, the cost of insuring bonds has jumped severely since 2009.
Right. So the global deflationary collapse is affecting all these economies. And why? Because all these banks and all these economies bought the same so-called insurance products from the same banks on Wall Street, Goldman, JP Morgan, that they thought were going to protect them against a downturn. But it turns out, just like in '87, when I was working on Wall Street, we sold a lot of what was called portfolio insurance, which, of course, did nothing in the '87 crash. So now you've got a deflationary global crash. All the so-called insurance that was sold, peddled by these snake oil salesmen on Wall Street, has proven to be completely worthless.
But it's also a case of the article is pointing out that the bond vigilantes are back, and the bond vigilantes are attacking these countries across the European Union. But as we know, and as we've covered, and Russia Today has covered, it's these products sold to Greece, which all this turmoil is being caused by, were fraudulent. You know, Goldman Sachs sold them these fictional exchange rate credit default swaps, currency swaps, and now everybody is worried that they're all fictional across the entire European Union.
Well, bond vigilantes meet gold vigilantes. Ouch! Ouch! You're hurting me! Ouch! The gold vigilantes are beating up the bond vigilantes! Ouch! Ouch! Look, the bond vigilantes are getting slaughtered by the gold vigilantes!
Well, so as we have all this turmoil happening in the lending and credit markets and sort of manipulation seemingly going on in the gold market, now we turn to the hordes that those billionaires are ready to gun down. Rich people still have jobs, poor people don't, according to this headline. So a recent study is out, and it shows that the very bottom of the labor pool, the very bottom percentile, those earning less than $12,500 a year, so the people on minimum wage, they are experiencing depression-era level of unemployment. They're at 30.8% in the fourth quarter of 2009, while the top percentile, those earning over $140,000 a year, they're experiencing full employment levels of 3%.
Well, you know, during the feudal period before the Age of Reason, this is the kind of economic model we saw. It's called feudalism. Then you had the revolutions of the 18th century, which brought about this whole new model of so-called capitalism, but that's been repealed now due to fraud on Wall Street.
That's exactly right. But also the authors of the study say that the middle classes, all the middle incomes, have, you know, the numbers suggest they're suffering a deep recession. But the very top, you know, anybody earning over $100,000, basically there's no unemployment there. So it also puts lie to the notion that there's trickle down, because there's clearly no trickle down. It looks very much, if you look at this pyramid, like a trickle up pyramid Ponzi scheme.
Yes, the trickle up is clearly in place. This is what Barack Obama never figured out when he took office, is that the whole model is to transfer billions, hundreds of billions, trillions of wealth up to the ruling banking elite class in this neo-feudal model. And I still don't think he gets it yet.
Well, I think probably because everybody in Washington, anybody who's working, anybody on Wall Street, all of his friends, all of his lawyers, there's full employment there. So unless you go out and see somebody earning $12,500 a year, or if you're earning $20,000 a year, the unemployment levels are 19.1% according to the study. So unless you meet those people, you're not going to see that there's actual real very, very bad suffering. And this includes income from unemployment and sort of welfare checks.
Well, you know, our friend Dmitry Orlov, who wrote that brilliant essay about the collapse gap, talking about the collapse of the Soviet Union, is prelude to a collapse in America, and we're seeing that in America now for the same reasons. America's bankrupted itself on specious war interventions and genocide committing in places like Iraq, and now they're in Afghanistan, and now they're saber-rattling in Iran. With what? Borrowed money from China? Meanwhile, China's saying, we're not going to lend you any more money. Where are they going to get this money from? Well, they're going to print it up in the basement. That's hyperinflationary.
And I have one final headline regarding this unemployment situation. So, because, as you mentioned, the states, the United States, and all the states within it are going bankrupt, they're having to release prisoners early. But, unable to get jobs, freed inmates return to jail. So recidivism rates are likely to rise as jobless rate for ex-cons may be 60%. So they're being released from prison because the states can't afford to keep them in prison anymore. And yet they go out into an economy which is in a Depression-era situation. So they're committing crimes to go back into prison so at least they have some meals.
Well, remember, Stacey Herbert, the reason the terrorists attack is because they hate our freedoms.
Apparently. But so they point out that 1 in every 31 Americans were on probation, in prison, or on parole in 2008.
Not much freedom there.